Hey, what's up, stock compounders? Brad here. So today we're going to be talking about the most popular stocks on the Robinhood platform. These are the 10 most popular stocks that were bought in the last week through Robinhood. And you can find this information on a website called robintrack.net. I didn't do this Robinhood roundup last week, but what's really interesting is I did it 2 weeks ago. And if you look at it 2 weeks ago, it's the same companies in the same order that we have from the last week. So that's so unusual. I've never seen that before. Usually the companies change quite a bit from week to week. So because that's the case here, I decided to add this column that shows, all right, how has the price changed for that particular company since I did this 2 weeks ago. But so the columns I have here, a lot of them are filters that I use to help me decide if a stock is worth looking deeper into. So, obviously we've got the name of the business, the ticker symbol for the stock. Market cap is really shares outstanding times the price of a share. Okay, so it's the market capitalization of the company. And that gives us a sense for how big the company is or how small the company is. You can see Apple here is the largest U.S. public company at $2.15 trillion of market cap. I think Microsoft and Amazon are number 2 and 3. So some really big companies in the top 10 on Robinhood from the last week. You've also got some pretty small companies. 300 million market cap is quite small for TRNA and IPOS. Next column is price. That's the price from today, August 28th. Price to earnings ratio. So this is really an indication of what are you paying per share of stock versus what are you earning on that share of stock. Stock is really just a partial ownership stake in a business. And so to determine the earnings, this would be the earnings per share figure. So you got price per share divided by earnings per share, which gives us our price to earnings ratio. The higher the price to earnings ratio, usually the more expensive the company is. Super investors. So this is how many super investors own this company. And this is super investors that are tracked through a website called Dataroma. Okay. Dataroma aggregates, what great investors have bought and sold in recent quarters and what they own in their portfolios. So that's a great website to see what the best investors in the world have bought and sold recently to give you ideas about what stocks you might look into. But also how many super investors own the company, to me, is a strong indication of how worthy of an investment it is over the long run. Of course, you also have to factor in the price paid. You see 11 super investors own Apple, but none of these super investors bought Apple in the last quarter. It's something they've had in their portfolio, in most cases, for quite some time. So timing and price is very important to consider. Next column, earnings yield. Actually, these two columns go together, earnings yield and return on invested capital, ROIC. These are really Joel Greenblatt's two metrics that he uses in the magic formula, which I have another video where I've set up a magic formula portfolio for myself to just see how it does. But anyway, earnings yield is a measure of how cheap a company is. And return on invested capital is a measure of how good a business is. So the idea is when you combine companies that are both cheap and good, you can outperform the market. That's kind of the thesis that Joel Greenblatt has for his magic formula investing approach. And so for these companies, we're looking at earnings yield and return on invested capital to just give us a sense, how cheap is the company, how good is the company. And then VIC is Value Investors Club. Okay, that's a website also created by Joel Greenblatt. And if you don't know Joel Greenblatt, definitely check him out. He's a legendary hedge fund manager who returned something like 40% per year. I think over like 20 years. He had to return all the money of the fund to the investors because it got too big, which is a fun problem to have. But Value Investors Club is a site where you can submit investment ideas, and only the best investment write-ups make it through to the point where everyone can see them. And it's just a great way to kind of get in the minds of some great investors, what they're seeing in different companies. So you can search a company on Value Investors Club and see if there's a write-up. And you can see here the ones that have months and years and prices. Those companies had a recent write-up in Value Investors Club. It's a great way to just wrap your mind around the business and see what another great investor is seeing in that investment potential. Little description, and then I said like the last 2 weeks, how is the stock done over a very short time frame, a 2-week time frame. So let's get into it. Apple. So my sense of Apple is that it's very expensive. Price to earnings ratio of 38. If you look at the historical price to earnings ratio for Apple, 38 is very high relative to what it's traded for in the past. Obviously a great company, 11 super investors own it, Warren Buffett notably in there. Earnings yield, like I said, low. It's an expensive company. Return on invested capital is fantastic. We know it's a great business, but like I say in most of these videos, a great business is not a great investment at any price. It's really important to consider the price that you're paying. And Apple has been such a performer in these Robinhood Top 10s. So much hype around Apple. Everyone wants to own Apple right now. And that's usually a good indication for value investors when it might not be a great time to buy, when the masses are flocking to a company. Often too expensive when that happens. Over the last 2 weeks, it's up 10%. Some of that might be the anticipation of the stock split, but that is an outstanding, gain over a 2-week period for the largest company in the U.S. But I'm staying far away from Apple until it comes down a lot in price. Tesla. So Tesla, another success story, a stock that's just done incredibly well in the recent past. It's barely making money. A share of Tesla stock is $2,200, and you're basically earning $2 on that share of stock over the last 12 months. Okay, so you spend $2,200, you get $2 back. Obviously, that's looking backward. People think Tesla is going to go to the moon, but that's a scary thing when you're invested in a company, and so many people think it's going to go to the moon. We saw what happened with Bitcoin back in, I think it was 2017, when everyone thought it was going to go to the moon. It went from below $1,000 up to $20,000, and then of course it came back down to earth. That's kind of where I see Tesla right now. Everyone wants to own it. To me, that's a scary place to be as an investor. But you can see what it's done. In just the last year, it's up almost 10 times. Okay, so it's hard to argue with that performance. But again, there's just so much momentum behind this company. Investors clamoring to own more and more of it. It's up 35% just in the last 2 weeks. MRNA, Moderna pharmaceutical company. This company doesn't make money. It has negative earnings. It's burning cash. I think it's probably a play on a vaccine. But I don't see anything here to make me interested in going deeper with this company. No super investors, no earnings. It's down slightly from 2 weeks ago. Microsoft. It's expensive as well. 38 price to earnings ratio, same as Apple, coincidentally. More super investors own this one. 20. I think it's like the third most popular stock right now for super investors, behind Facebook and Google. Earnings yield, same as Apple. It's expensive. It's expensive. There's a lot of hype around Microsoft lately, based on potentially buying TikTok, and just the biggest 6 tech companies in the stock market have just been carrying the market, and Microsoft is clearly one of them. Great business, 23.5% ROIC is fantastic. You can see there was a write-up from 2 years ago. The stock has more than doubled in 2 years, which is a fantastic return. A double in 2 years is a 35% annual return. Some of you are like, well, wouldn't that be a 50% return? But you've got to factor in compounding, right? So Microsoft has done wonderfully recently. It's up 10% in the last 2 weeks, just like Apple. But to me, it's just too expensive. It's too expensive. There's too much risk paying today's price for Microsoft. Antero Midstream. So this is a natural gas production company. This one is interesting to me. Price to earnings of 12. I don't know what the average price to earnings is in this sector, but there is one super investor who owns it. They actually added a lot to the position in the last quarter. You can see earnings yield 9.2. That's interesting. Return on invested capital, nothing really compelling there. There was a write-up a year and a half ago in Value Investors Club, and the price then was almost 2 times as high. So the price has come down a lot. This might be worth looking into. And I said 2 weeks ago, if there was one company from this list of 10 that I would look more into, it would be this one. It's down slightly from 2 weeks ago, 7% down. So I'd say this is probably the just looking at these numbers, this would be the most compelling value investment on this list by a long shot. Rocket companies. So this is a company, I believe it's the company that has Quicken Loans, right? And it IPO'd, I think maybe 3 weeks ago. So still very hot off the press. Pretty interesting price to earnings ratio there, 9. It's up a lot since 2 weeks ago, 49%. But again, there was some inconsistent information about rocket companies when I looked at Robinhood, what Robinhood said the market cap was, and then I looked at Morningstar. Inconsistencies. So I think because it's such a new company, because the IPO was so recently, these companies, Robinhood and Morningstar, they haven't really kind of ironed out the bugs yet. They don't have all of the information from rocket companies in their systems. And I don't like to buy fresh companies off IPOs anyway. So, I'm going to wait until there's more fleshed out with rocket companies. But a PE of 9, if that's accurate, is interesting. Trevena, a pharmaceutical company, this one is down 24% from 2 weeks ago. Very small company, 300 million market cap, and it doesn't check any of my boxes, right? There's no earnings. It's burning cash. So I have no interest in looking deeper at that one. iBio, same situation, 300 million market cap company. It's down a bit from 2 weeks ago. No earnings. So, I'm out at that point. NIO, Chinese electric vehicle company, kind of a luxury electric vehicle company, in the same way that Tesla started out here in the U.S. And I think part of what we're seeing in NIO, up 41% in just the last 2 weeks, people are thinking this could be the Tesla of China, right? And we've seen what's happened with Tesla over the last year. So I think that storyline is driving a lot of enthusiasm for NIO. Investors who missed out on Tesla, you can see kind of piling into this one, driving the price up. But NIO hasn't gotten to profitability yet. It's trending towards profitability. There's a YouTuber I follow called Hyperchange. He recently did a video on NIO. He's really thoughtful with the way he does valuation, I think. So if you're interested in NIO, check out the video that he put out about the company. There was a write-up from a year and a half ago, and it was a short thesis, right? So this investor thought, okay, we should bet against NIO. The price is too high. And that short thesis actually won an award through Value Investors Club. It went from $5 down to $1.50. And of course now it's at $18.50. So just because this thesis won an award and it was a short at $5 certainly doesn't mean I'm saying we should be shorting at $18.50. But it just seems like a risky bet. The company hasn't really proven itself yet. And I don't like to buy into companies until I have some numbers from the past to look at with positive earnings, and I need to feel comfortable with that my investment dollars are safe before investing, and I'm not quite there yet with NIO. It still seems like a high risk proposition. So, but I'm keeping an eye on NIO for sure. It's definitely an interesting one to watch. And then finally, Amazon, another great story. Just since March of 2020, since the beginning of this pandemic, Amazon has nearly doubled, okay, which is remarkable for a company that's so big, right? $1.7 trillion in market cap. And it's doubled in the last 6 months, which is just amazing. It's really expensive. Price to earnings of 132. So, if you put $132 down for the stock, you're getting $1 back in earnings based on what's happened in the last year. There's so much growth priced into Amazon right now. And the thing about Amazon, Bezos is such a magician. You can't really bet against Amazon, but you don't have to bet for it either. And that's kind of the position I'm taking is it's too expensive for me. It's way too expensive for me. I can see myself owning it at some point, but it would have to come down a lot from today's price. You can see super investors love the company. There was actually some buy activity in the second quarter of 2020 for super investors, which surprised me. It seemed expensive then. But again, you can't bet against Amazon. Like I said, it doesn't mean you need to bet for it. 1% earnings yield, very expensive. I don't think this return on invested capital really does Amazon justice. I think it's probably a better company than what this number would indicate. And yeah, it's up 8% over the last 2 weeks. So yeah, I think that's what I got, guys. Just wanted to share the top 10 stocks on Robinhood over the last week. And yeah, I didn't make a video last week because they were somewhat similar. They hadn't changed much, and it's not that interesting for me to make a video if there hasn't been much change. But the thing I thought was interesting about this week was just looking at what some of these companies have done in the last 2 weeks in terms of how the price has changed. Apple, Microsoft, Tesla, rocket companies, NIO, Amazon. Very, very notable growth over just the last 2 weeks. So let me know if you guys are buying any of these or watching any of them. I'm none of these are very close to where I would buy them. So none of these are really on my watch list. But yeah, just thought it was interesting. All right, guys, I will see you in the next video. Take care.